Dr. Brian Jacobsen is a PhD in economics, but we're going to turn you into a medical doctor right now. Let's do an autopsy of what happened this week.
Yeah, it was really interesting, and I think it really stems from, if you remember, there was that book from the 1970s, Alexander and the Terrible, Horrible, No Good, Very Bad Day.
Right.
And I think that was the week that preceded what ended up happening on Monday, which was a very bad day. And it was really just the coming together of really different factors that I think led to that almost panic selling situation on Monday. You had on July 31st, the Bank of Japan decided to surprise the markets by hiking rates. Most central banks nowadays don't try to surprise markets, but for some reason, the Bank of Japan, they did. And that ended up creating all sorts of problems for some bigger hedge funds and that were really levered. They would borrow cheap money in Japan, invested in Magnificent Seven stocks, and all of a sudden they had to buy back those stocks, or that is, sell them in order to pay off those loans because rates suddenly went up, the currency strengthened, they were caught off sides.
So that was this term that's been thrown around about a carry trade, right?
It is.
So I don't want to get too deep into it, but that's really what happened is they got caught with their shorts.
Exactly. That's right. Yes. The carry trade, it can be very profitable until it's not.
Right.
And then it's very unprofitable. And we had that also combined with some of the Magnificent Seven stocks reporting earnings that the earnings were good. It's just that the guidance wasn't all that great, right? There were just very lofty expectations about maybe how long that they can continue to grow their earnings and revenues at the pace that they had. So that was a second factor, some of that weakness there. Then you also had some weak economic data. We had the ISM manufacturing number, Institute for Supply Management, showing that manufacturing was continuing to struggle and increase.
But it's been going on for a long time. That wasn't new news, and that was surprising to me is because I don't know how many months in a row it is, but it's been significant.
Yeah, it's been like 19 out of 20 months that it was below 50. And I think that...
Which shows retraction.
It does, exactly. That 50 is that borderline between if it's above it, expanding, below it, it's contracting. Some of the details were kind of worrying in terms of what's happening with new orders and employment. And so I think that's where there was more of the surprise. You also had an increase in unemployment insurance claims. So that all took place on Thursday. Then on Friday.
But let me just jump back to that. So there's a theory in economics that when you start to see unemployment go up, that it's a cause for concern, and it's a half a point, right? It's way more than that right now and could go higher.
It could. And I think that it really boils down to why is it going higher? And the person who discovered that historical regularity, Claudia Sahm, so it's called the Sahm rule. So you look at the 3-month moving average of the unemployment rate. If it has gone up more than 0.5 percentage points over its previous low, that in the past, that's always coincided with the start of a recession, and we have hit that point. But what's different when you get into the numbers is a lot of what's been happening now, increase in immigration, which has increased the labor force. Oftentimes when people enter the labor force, they don't initially have a job. They're looking for a job, so they come in as unemployed. And so you really have to decompose as to why is it going up. And it could continue to increase, and so we will monitor that. But I don't think it has put on that red flag quite yet that we're going to say, hey, a recession has started, because I don't think the data supports that.
And Danny, by the way, it's Psalm, S-A-H-M, not Psalm, like the Old Testament, right?
See, most of the people know Psalm as stay-at-home mom.
Right. There you go. See, there's the third option.
I like that. Yeah.
Exactly. So all of this information was coming out. You have economic news. You had obviously what was happening with the carry trade, but there was some good news that kind of got overshadowed, and that is the earnings reports have come out, and they're pretty darn good.
They are, and that's just it. Earnings are up like 11% year on year. The beats rate, so the percentage of companies that are beating the expectations going up, is higher than historically average. But a lot of the good news is more with those other 493 stocks, right? So if you think about the S&P 500, the top 7 driving things, maybe they stumbled a little bit. It was the other 493 that are beginning to show a little bit more traction, perhaps growing their earnings. So that is something that has been overlooked. Another thing that maybe has been contributing to market volatility, it's an election year.
Yeah, for sure.
Wow, have things changed in terms of the outlook for the election.
This is what I would tell folks is I turn you into a pathologist, now I'm going to turn you into a pilot, right? And so we're going to have a bumpy ride.
Absolutely. Yes. I think that it goes without saying is that it's an election year. August, September, October tend to be more volatile because of the political volatility that's out there. Also, we're at an inflection point with monetary policy that contributes to volatility. How much will they cut? When will they cut? We think it'll be 25 basis points at the September meeting. That will contribute to it. And it's really what I think is a show me the money kind of market where people now are a little skeptical about, okay, are the earnings expectations too high?
Right.
So now companies really have to deliver on that. We've seen valuations, price to earnings ratios, those have gone up. Now it's time for those earnings to catch up to the prices.
So I don't have the ding, Danny, but if you had it, if you were ready to go with that button, you could hit the fasten your seatbelts. It's going to be a bumpy ride
Boom,
sign.
boom. I kind of like that. I like that sound. I don't know if I like the sentiment, though. Right.